we're at the final stage of the parabolic move. So post-halving, about 178 days out, you get a big move, which we just had. And then in the next kind of 120 days, you get the total parabolic. And that's because everybody's going to be home at Thanksgiving talking about it. And then everybody's going to try to buy it. And then the ETFs are going to buy it. And buying begets buying. And I think we go truly parabolic. Between now and kind of middle of October or middle of December, I think we're definitely into 6 digits. I think we're definitely how high? 110, 120.
Mark Yusko begins by highlighting Bitcoin's cyclical nature. He explains that post-halving events often lead to significant price movements as supply becomes more restricted. According to Mark, the price trajectory typically includes an initial rally followed by a parabolic spike about 120 days after the halving, a pattern he believes is driven by heightened awareness, media coverage, and social influences. Holidays like Thanksgiving are key times when people discuss investments, and Bitcoin inevitably becomes a focal point of conversation. This social aspect, combined with the potential entry of institutional investors through ETF, could create an unprecedented demand, pushing Bitcoin's price to 6 digits.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Just depends how much crazy. If you remember, in 17, we went from 10,000 to 20,000 in about 8 weeks.
Yeah.
And then on December 18th, they allowed futures and we went down. Because again, what's happening, and you can see it on your clock behind you, the price is going down. Well, why is the price going down? Everybody's buying. We had set record for new buys. Remember, a lot of those buys, particularly by the hedge funds and the traders, they're shorting the future against it. So they're pushing the price down so they can buy it cheaper, right? Dirty little secret on Wall Street. If you like something, you don't tell everyone you like it. You tell everyone you hate it. And then you go out and buy more of it. So they're pushing the price down on futures. And that's why in 17 and then 18, we had the bear market all the way down to 3,000. So then in 21, we were at 13,000. We went to 60,000 by mid-February before Elon tweeted that he wasn't going to accept it for cars. And then we dropped 50%. And then it went up 100 back to all-time highs before the bear market. And so I think that's where it changes. So sometime first quarter next year, second quarter next year, we get the next bear cycle. There will be another bear cycle. And the depth of the bear cycle will depend on how high the blow off top is. Because fair value is just going to keep accreting. Fair value today, probably in the 80s, somewhere like that. By middle of next year, it'll probably be closer to 100. And that's just the Metcalfe's law value of the network.
Right.
But if we go to 150 or 160, then we're definitely going to crash. And we'll go right through fair value as we are prone to do. Now, do we go down 84% or 83% or 67%? I don't know. It all depends on how much leverage gets in the system, because ultimately that's what determines the cycles. When the price is below fair value, the investors come in. People like me who like to buy things below fair value. That's our job. Then as the price starts to get towards fair value, the traders come in. And traders don't care about fair value. They just want movement. Well, then as you get above fair value, the speculators come in. Well, why do the speculators come in? Because the hedgers, once it's above fair value, they will sell. And a speculator is just the opposite side of a hedger, right? So the miners hold until it gets above fair value, then they sell. Well, then the gamblers come in. And the gamblers, all they see is a price going up. They just buy it on margin and they hope they can get out before it goes down. And then it just unwinds the same way. I said, ETFs are really a boomer wrapper. And boomers kind of get digital gold.
Yeah.
Right? Because we all get gold. I say this all the time. Ask someone over 35, who's your broker? I don't know, Merrill Lynch, UBS, why? How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh my God, 0. It's a Ponzi. Haven't you heard that Peter Schiff guy? How often do you use DeFi? What the hell is DeFi? Ask anyone under 35, who's your broker? What do you mean? What's a broker? I mean, I got a Robinhood account. How much gold do you have? Oh my God, Boomer Rocks 0. Haven't you heard that Peter Schiff guy? How much Bitcoin do you have? I don't want to talk about it. Why not? It's like a really big part of my net worth. I'm kind of embarrassed. How often do you use DeFi? Every day. So the digital divide is real.
Yeah.
And so what is likely to happen is these other ETFs will get approved, but the people who have the wealth, right? The boomers, right? The boomers have $39 trillion of wealth, which is all going to go to y'all, right? It's all going to go to the echo boomers and the Gen Zs when we all pass, because we're all going to pass. And it's going to go to you, and you're not going to leave it in stocks and bonds and currencies. It's going to convert. So that'll be a big upward move. But in the short run, my dad, right, who's at the front end of the boomers, and I'm the tail end of the boomers, he didn't care about Ethereum. He didn't care about Solana. He didn't care about SWI. He didn't care about transaction speeds. And all he wants is digital gold. Yeah. I get that. I like that. Okay.
Yeah.
So I just don't think there's the natural demand for these other things. And the people who do understand this, they don't have a lot of money. I mean, some of them have made good money. Don't get me wrong. There's some people who made a lot of money. But on average, kid coming out of college with debt and, first job, they don't have a ton of money.
Right.
And so, yes, they will speculate in these ETFs because they can buy it in their Robinhood account and don't have to worry about keys and all that kind of stuff. But I just don't think there's the same type of institutional demand. Now, if we solved the argument between Ethereum, Solana, SWI, and a handful of others of Avalanche as to which one truly is the best smart contract platform, that one I think could get some winning, because smart contracts are going to rule the future.
Yeah.
The ability to hard code criteria for payments, for transfers, for conversions of bonds into equity, for all kinds of financial services.
While Bitcoin holds significant value as a digital store of wealth, Mark acknowledges that other blockchain platforms such as Ethereum, Solana, and Avalanche could play vital roles in the future of finance through smart contracts. These platforms allow for programmable agreements, which could revolutionize everything from payment processing to bond conversions. Mark suggests that the smart contract platform that ultimately prevails will benefit greatly from institutional adoption and investor interest. However, Mark is cautious about the speculative nature of many altcoins. He believes that while some younger investors may see potential in these platforms, they lack the financial power to make substantial market impacts. Furthermore, without a clear winner in the race for the best smart contract platform, institutional investors remain hesitant to fully commit to these assets.
If I'm working for someone else and they're paying me in an asset that then gets devalued over time because the government just prints more of it, isn't that theft, right? Isn't that inflation stealing my wealth? Well, what if I could get paid in this other asset that doesn't devalue? The thing I think that's interesting about Bitcoin is, right, we're celebrating that it got close to near all-time highs again. And it's, this is October, so we're up like 13, 14% in October. So it's up, I think, 15 out of 16 Octobers, which is pretty amazing.
Mm-hmm.
And I think November is going to be even better, and December could be just lights out. And we can talk about why. But when I think about all of that, what it really says is people are realizing that one Bitcoin is one Bitcoin. Right? Bitcoin actually doesn't change. It's the thing that we all And when I say we all, meaning global society, chooses to value it in. So in Argentina, the price only goes up because the peso only goes down.
Right.
In Turkey, the price only goes up because the lira only goes down. In lots of places around the world, mostly where there are dictators, they devalued the currency. That's part of the dictator playbook because it siphons the wealth up to the tippy top, the all-seeing eye. And you could argue pretty convincingly that, the current Western administrations, broadly speaking, are doing the same thing, right? They're devaluing their currencies. So the people at the top, their donors, keep them in power and get super rich. Because if you borrow in a wasting asset and you have to pay back in dollars that are worth less, and your asset goes up, so speculating in real estate or stocks, or the problem is the average person doesn't own those assets. They rent their home. They don't own stocks. They can't get debt, right? They don't have a high enough credit score to get debt. And so as more people realize that they can opt out, maybe not for all of your money, because again, to be a functioning member of society, we, through belief and custom, have decided that each country will have its own currency. It's not money, it's currency, right? It's paper with no inherent value or intrinsic value backed by debt. I always find it funny, right? In America, we use green pieces of paper, and in Israel, they use yellow pieces of paper, and in China, they use red pieces of paper, and in Europe, they use plastic, and it's not even paper. And it's just kind of interesting. But we all have this belief system that if I hand you a green piece of paper, you'll give me some good or service. Well, the problem with that is if I have a green piece of paper and they literally can run a printing press, although they don't do it with paper anymore, they do it with ones and zeros on a computer. And if I had $1 million sitting over here and you printed another $1 million, the value just fell by half. And that's what constantly has happened since the 1600s when the first central bank was created. And Bitcoin solves that problem, right? After all those years, we now have a way where we have a fixed supply. It's even better than gold. Gold, you can go out and dig it out of the ground, or you can mine asteroids for it or whatever. I don't know if they'll actually ever do that, but they say they can. So the volume of gold could go up, maybe even precipitously if you had a big discovery. But we know every day for the next 140 years how many Bitcoin are going to be created. So it's a predictably scarce asset.
Mark Yusko's analysis paints a comprehensive picture of Bitcoin's potential, both as an investment and as a disruptor of traditional financial systems. He sees the asset reaching new heights in the short term, driven by cyclical factors, institutional interest, and generational shifts in investment preferences. However, Mark also cautions that Bitcoin will continue to experience bear cycles as speculative bubbles inevitably burst and the market corrects itself. As we head into a new era where digital assets play an increasingly important role, Mark's insights remind us that Bitcoin isn't just another speculative asset, it's a fundamentally scarce and resilient alternative to fiat currency. For those looking to protect their wealth in an era of inflation and currency devaluation, Bitcoin offers a unique opportunity. Whether or not you choose to invest, understanding the broader economic shifts at play is essential in today's rapidly evolving financial landscape.
Please like and subscribe my channel.